Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I am your host, Chris Seveney, and today I have a special guest. I'm reciprocating the favor as, probably about a year ago, I was on his show. Today I have Michael Zuber with One Rental at a Time. Michael, how are you today?
I'm doing very good, Chris. Thank you very much.
Good. So Michael's on, and Michael is author of a book, like I said, One Rental at a Time. And one of the reasons I want to have Michael on is to talk about the growth of his business. And like I mentioned to him offline, reminds me a little bit like myself, where we're just out there to try and help people and assist people in growing and kind of share our story. And that's how I look at it from note investing perspective. And Michael does it with his the rentals. So why don't you tell people a little bit about yourself?
Thanks, Chris. Thanks for the opportunity again. So really my story, as you'll see in One Rental at a Time, is I was just a full-time employee. I frankly didn't have visions. I had no grand goal. I was a 30-year-old man who had been burned in the stock market, and I wanted to have a better financial future. And at the time, right, Rich Dad, Poor Dad sent me on this path to, you know what, if I can get a rental, maybe 2, maybe 3, my life would be better. And that journey began with a house on Norris Drive, which I talk about in the book. It starts out horribly, but ends up pretty good. And, that journey from a single house, went to 2 to 3. And again, my story starts back in 2002, December 2002. So before the last crash. Mm-hmm. And, we basically traded out of houses into apartments right at the mm-hmm. peak. So we weren't impacted by that. So that's always mm-hmm. fun to talk about. Then the crash happened and banks wouldn't lend. And oh my God, what are you going to do? And, we buy a bunch of stuff during the crash and then, it turns around and suddenly everybody wants to be Grant Cardone and bigger is better. And people are buying apartments at stupid prices. So we sell our apartments at stupid prices. And, now we're sitting in an environment with a decent amount of cash. We live very modestly. So we live below our means, and we're both financially free. When I say both, it's my wife and I. She's been out of the game for 5 or 6 years. I've been out for a couple of years, and now we just enjoy life. We do what we want, and we like to give back. So happy to go anywhere you'd like.
Yeah. So how many doors do you have right now? Out of curiosity.
I think the last time I counted was about 170 or 175, somewhere in there.
Wow. So that's, 18 years, roughly 18 years of growth. But, again, that's through at least one downturn. And, right now we're in, definitely some interesting times. And mm-hmm. you kind of hit upon something too of, people buying buildings and, or, just buying things because they have the cash. And just because you have the money doesn't mean you should go out and buy something. When you see people selling stuff at, 4, 5, 6 caps, in markets that really don't justify it. And it's really a 10 to 12 market cap. That's where you see people really start getting in trouble. First question I was going to ask is, what did you see as the biggest hurdle from going from, full-time, which I still work full-time, and I manage a portfolio of mm-hmm. roughly about 180 notes. So we take, doors to notes, somewhere in that size. The difference is you're financially free and independent. I'm not. But what was your the biggest hurdle you had to overcome?
Yeah. So the biggest hurdle for me was just my personality, right? I have grown up in a sales career. I've been commission-based salesperson since I was selling washers and dryers 3 decades ago at Sears and Roebuck back there in Cupertino. So I've been on a commission plan for 3 decades. So and back then I lived weekly, right? Because we had weekly numbers we had to hit. And if you missed a week, you'd go on plan. If you missed 2 weeks, you'd get fired, right? Mm-hmm. So I've lived in an environment for 3 decades where my job was always on the line. Mm-hmm. And you just operate at different speeds when you are always afraid of being fired. Mm-hmm. And so we get to a point, I'd always planned to retire at 50. Life has a tricky way of getting in front of you. At 45, I was put in an environment where I didn't like my boss and my boss didn't like me. Mm-hmm. And I was like, you know what? I don't have to work anymore. And, sends a quick text to the wife saying, honey, I'm coming home. And that was it, right? So the biggest challenge for me was when you do that, you have 2 days where you're just smiling, right? I smiled so much in 2 days, my face hurt. I mean, that's how much I was smiling.
Then you have the oh
But
shh moment.
well, it wasn't really an oh shit. Well, kind of an oh shit moment, but it was
Yeah.
basically, what the hell am I doing? Your mind game.
Mm-hmm.
My mind game started getting a hold of me, and very quickly I went from smiling to being in a depression. Right?
Mm-hmm.
I was depressed. I started feeling like a failure because, I haven't had to get up, by an alarm clock in years, and I still haven't. Right? I've been out of work 2.5 years now. I was still up this morning at 5:45. My body wakes up. Right?
Mm-hmm.
So I was up at 5:45, and I was feeling like a failure. Right? I didn't have a North Star. I wasn't going anywhere. So I was literally a week away from just accepting a job, just a job. And I remember sitting there driving home from San Francisco going, am I really going to get a job just so I feel like I'm a success? Or can I do something else? And that's where the prod came from. You know what? You should tell your story, and what became a book. Originally, it was going to just be a free PDF because I'm not a great writer, right? I just started writing, and it ultimately became a book. And then I created that YouTube channel, which you were nice enough to be on.
Mm-hmm.
And, my North Star became helping people. So I told a couple of companies that were aggressively recruiting me, I'm going to take the rest of the year, which was about 4 months at the time, and I'm going to see where this goes. And if I feel fulfilled, I'm going to keep doing it. But if I still feel like a failure, I'll call you January 3rd, and we'll talk about a position. So that was for me. The biggest thing was feeling like a failure. I mean, which is crazy. You're 45, you don't have to work, you live modestly, and you feel like a failure. I mean, your mind's the mind can be toxic.
Yeah. It's, people ask me, they're like, why do you still do what you do full time? And, because I'm at a point where I could make a conversion, but I enjoy my full-time job, and I'm similar to you. I get up early every morning. I'm up till 11:30 at night. What would I do with myself? Is really what would happen. I mean, I have kids in school. My wife still works. I'm going to be 45 this summer. In 10 years from now, kids are off college and stuff like that. Yeah, maybe okay, get the golf game in and so forth, or, work on something along those lines and something else. But it's, like you said, that your mind plays tricks on you. And if I was sitting around, not doing things, I'd go stir crazy and almost be like, okay, and similar to you, I'd probably go get a job just maybe to feel more satisfied from that perspective. So was your wife supportive? Because that's another thing. A lot of people who try and make that transition, whether it's a woman making it to the man, woman making this transition as well, and so forth. But your spouse, and getting your spouse to be supportive, it can be definitely trying. And I was curious, with you, how'd that occur?
Yeah. So as I write in the book, and I actually dedicate Olivia, which is my wife's name, the book. She's not only been supportive, but she's been the anchor at many different times. We in golf, there's like, when you play golf, there's this thing called ham and egg, where you have a bad hole, your partner has a good hole. It was very much like that for Olivia and I. Sometimes I was up, she was down, and when she was up, I was down. We really, really complement each other. And I give her full credit for our entire journey, because we had that horrible experience with that first rental where the tenant moved in and never paid and then destroyed the house. I was convinced she was going to tell me to sell it and take a loss. But she says, nope, keep going. So she not only gets credit from the very beginning, she gets credit throughout the journey. And then when I decided to leave, spur of the moment, because literally I leave the house at 6:45, whatever day it was, call it a Tuesday or a Thursday or whatever it was. She's already retired, right? So she's enjoying, she's comfortable with that. But I'm going to work because I like my job. So I leave that day, get to work, find out there's going to be some adjustments in a sales career, because that's what happens. And I'm going to go work for a guy who I don't respect and who doesn't like me. It's just toxic. And we have it out. And I'm like, okay, package time. Give me a package where I'm out. I can't work for you. I send her a text. She goes, come home. I'm like, wow. She's a rock. She's very supportive. And I wouldn't be where I am today talking to you without her. We wouldn't be financially free without her. Because again, part of the journey that you'll see in our book is it was 15 years in duration. But what people don't like to hear is there was a lot of sacrifice in that 15 years, right? As you have more assets and you have more income, you've got to keep your expenses low. And she was an equal contributor in that, and deserves tons of credit.
Yeah, that's one thing I wanted to touch upon. But first, I want to, without spoiling the book, because I think it's
Hmm.
a lot of people who listen should go out and get the book and read it because it's enjoyable. And
Hmm.
with the story, uh, you know, that first rental, in
Yep.
some of the horror stories, because one of the things you hear, especially on like bigger pockets, most people only show off their prize, their trophies, and
Yeah. The
talk about
wins, right?
the wins. And nobody likes to talk about the losses. And as real estate
Oh yeah.
investors, we all know that there's definitely those losses.
Oh,
And
for sure.
sometimes you just get scared when you see people posting stuff or doing things, and that's kind of like you're in a similar again situation where you try and educate people, because the last thing you want or I want is somebody to go make a mistake that could be avoided. And a lot of times people rush into things, and with that first rental and so forth.
Mhm.
What if you look back, was there one mistake that you thought of at that point in
Yeah.
time?
No, the good thing is, and I've anchored on this a lot,
Mhm.
and I'm convinced we did everything right. So
Yeah.
again, I'll just share the story here.
Mhm.
It's a part of the book, but it's
Mhm.
not a huge part of it, because
Mhm.
again, I share the losses. Lots of mistakes were in those 15 years. So
Yeah.
we buy a house in Fresno, California, which is 2.5 hours away. We've never been there. We don't know anything, but the numbers work.
Mhm.
We move the tenant in. They sign the lease, credit check, reference check, income check. Um, Everything was rosy. They move in.
Mhm.
2 weeks into the journey, the family breaks up. The wife takes off to Arizona
Yeah.
or New Mexico or whatever,
Mhm.
and the husband is not very happy. The
Mhm.
husband goes from a full-time employee somewhere to a professional alcoholic, never
Yeah.
goes back to work, and decides to drink every day.
Mhm.
And in California, that means I need at least 60 to 75 days to get him out. That's just how long
Yeah.
evictions take.
Mhm.
So we lose about 3 months of income.
Mhm.
And then we are nice enough to take over a house which we'd already remodeled. We get to remodel again and spend 15 grand.
Oh,
So again, think about that, right? Because
yeah.
again, right, what would happen to most people? Most people would go, I mean, like, let's just pretend you're a California investor and you're investing in some Midwest city.
Yeah.
Because that's what it was like for us, right? We'd never
Yeah.
been to Fresno.
Mhm.
And your first tenant destroys your house and never pays you rent. Because we got first month's rent and we got a
Mhm.
deposit. So we
Yeah.
collected about $2,000.
Okay.
We didn't see any rent for 3 months. We had to spend
Mhm.
$1,000 on the attorney, and then we had to spend 15 grand once they were out.
Yeah.
How do you like
Yeah.
me now?
Yeah.
Right? That can happen.
Mhm.
And it's amazing that it happened to us on our first house. And it's
Mhm.
even more amazing that we decided to keep going.
That's the amazing part, because most people would sell the house or whatnot, because when you look at it from a cash flow perspective, you're out that money. And if you're getting 100 $200 a door,
Yeah,
it's going to take 1,200 bucks a year. You're
oh,
10 plus years before you recapture that money.
absolutely.
And that's one of the reasons, and I'll ask this question a little later about where you invest too. It's one of the reasons why I kind of mix with, I have a few rentals and I like to mix them up, where I invest in the Washington, D.C. area because of the
Mm,
appreciation. You get better tenants, because if you have to spend that 15 grand, you're not really banking
mm,
on the cash flow as much, because, numbers will tell you over the long haul, yes, it's going to appreciate. I know you can't bank on appreciation, but if you're a long-term holder for 20 years, in most major cities, you're going to get appreciation, where if you're investing in the Midwest, you're really not getting that appreciation, and you are
mm.
banking on that cash flow, and you're just never going to recover. Would you agree?
Oh, without question. I mean, I've been asked probably the most popular question I get all the time is, why don't you invest out of state? Because there's always the question of, hey, why do you invest in California?
Mhm.
It's not landlord friendly. The
Mhm.
governor's going to attack you, rent
Mhm.
control, blah 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 blah. But it is because, again, my most common phrase is learn your market.
Yeah.
And when you learn your market, you can dance through raindrops, right?
Mhm.
We got out of single family homes in '06. Why? Because they were ridiculously priced.
Yeah.
We went all in 2010. Why? Because they were ridiculously low priced.
Yeah.
We got
Mhm.
out of apartments in 2019 because they were ridiculously priced.
Christ. Mhm.
So as long as you're willing to move your portfolio around, an up and
Mhm.
down cycle is very,
Mhm.
very helpful,
Yep.
right? That first house, just to wrap
Mhm.
up the story, is an awesome investment for us, even though it
Mhm.
starts out poor.
Yeah.
Why? We bought it for 107. We 1031 it
Mhm.
we sell it at 264
Yeah.
in 3 years.
Yeah.
3 years, we made 150 grand.
Yeah.
And we move all of that money into a 5-unit apartment building that we still own today.
Yep.
And oh, by the way, if we didn't sell, that house that we sold for 264 retrades at 75, because again, it goes up and it comes down. And as of today, it's worth about 180 to maybe 190.
Yeah.
We sold it for 264.
Wow.
14 years ago.
Yeah.
So again, if you know the market, you watch it, you learn it, you can take outsized gains and dance through the raindrop.
Yeah. One of the things that I've heard and read and kind of fall a little bit too is, with the real estate markets, people tell you, follow what the big REITs do, like the Blackstones and, those big REITs that have more cash than you know what to do with, because you'll see in these instances, but what they're doing right now, and over the last 12 months, they've been selling because because people were, like you said, people are paying ridiculous prices for things. And, if they, they're selling stuff at 4.5 cap, and they've got the cheapest money on the planet. I mean, they've got money from, endowments, insurance funds that all they care about is a 3% return or something, maybe a little more. So their money is very cheap, and they just follow the market, and they do whatever they do the opposite of what most normal investors, I'll say mom and pop investors do.
The reason I still speak at real estate meetups is because I want to know what, I want to provide value.
Yep.
What I am searching for every time is those questions, whether we let them happen during my talk or at the end. And back in 06, everybody flipped. I mean, this was how crazy 06 was. People were buying condos. They were getting contracts on condos, and then they were selling the paper. And that condo would trade 3 times before it was actually built, and everybody'd make 50 grand.
Yeah.
That was 06. I mean, that's just nuts. Now in 2019, everybody was a new syndicator and value add and all of this. And having owned apartments during a recession, those things suck. They're hard. What the hell are these people doing? I mean, we sold an apartment building that needed $200,000 in immediate capital investment, and they gave us like a 5.5 cap in a C market. I'm like, what are you doing?
You'll take it.
But closed. We took the money.
Yeah, and I remember 2006. I was working in Boston's Back Bay, which is the area was, basically expanding to, there's certain areas of Boston, the financial district, that are just like crazy expensive, and that bubble kept expanding. And this area was just in that bubble, and we were building 60 condos for a developer who was a large entity who backed a guy who sold an IT company. So this guy sold an IT company for like 20 million, put his 20 million into this deal, got some money from a private equity firm to kind of cover about 70%. He had about 25% in the deal, whatever it was. And these were front to back condos with elevators that open up, but in the back there was an alley, so you didn't see anything. So you had like one window in the place. And these things were going, they were roughly, I want to say 12 to 1,800 square feet. And they were going for $1,000 a square foot, which at the time was, expensive. And again, this was 2006 they started. So 2008, basically, they ran out of money, and the banks basically, they weren't selling. And when they were selling, all of a sudden they started selling at $600 to $700 a square foot. And it was, basically, and I feel bad because this guy, he wanted to be a real estate developer. He was great at IT, made, all this money, put everything into the deal. And, I don't know if he's ever recovered from it.
No, you got to watch the market. I mean, the market tells you what's going on. And when the lemmings come, I get out of the way. And again, I get made fun of. I mean, in 2019, I'm telling people we're selling apartments, and you should have seen the comments I got. I mean, you don't know what's going on, blah, blah, blah. And now, suddenly those comments aren't very good. Now they're like, wow, you did okay, huh? I'm like, well, it's because I look every day. I look at my market every day, almost 20 years, every day. People just, the market tells you what's going on.
Yeah. And, perfect example, I've been, one thing I'll mention about the markets is you got to look at it. Don't listen to realtors. And I say that with the utmost respect for them. But, my wife and I, we've been looking at an investment property more in a kind of vacation/investment type property. And this is an area that literally shut down, where they weren't even allowing non-resident property owners to get to these properties during the virus. And, I'm hearing from agents like, because we actually were put an offer in on a place that didn't end up happening. But, I'm hearing from agents like, oh, it's, now's the best time to buy. It's going to be hot, this and that. And I'm like, maybe, but this area, I can tell you, I know a lot of people who buy in this area can't afford to carry this type of home for 6 to 12 months without rent. And, there's going to be foreclosures. I mean, it's just reality. It's going to happen, and that's going to bring pricing down. And, but, for realtors, I mean, they're always, it's the best market in the planet. So
yeah, they're perpetually bullish.
Yeah. So now back to your portfolio and stuff. So all these doors that you have and stuff, do you have a third party management? Have you set up a management company? How's that work for you?
Yeah. So we've had property managers since day one, 2.5 hours away.
Mm-hmm.
I've never had any, I don't want employees, so I'll never set up my own firm. We've obviously negotiated nice discounts as our portfolio has grown. But again, I was too focused on being a full-time employee. My job took me around the world. I could very easily be in 3 different countries in a week. So there was no chance I wanted to be a property manager. Even when we just had one house, we would pay the 10% and then just consider that a cost of doing business.
Yeah, no, absolutely agree. And that's, one of the reasons I shifted over to the notes was, the whole tenants, toilets, and termites thing that don't have to deal with, which, we take properties back, we still have to deal with. But even for my rentals and stuff, one of them's about, and one of them's right borderline. It's like 45 minutes from me. The other one's an hour and a half. The hour and a half, I have somebody on site manage it. And the other one's kind of borderline. And what I do with that one, it's a condo that we completely renovated. So what I do with that one is I hire an agent to lease it out for us. And then during it, I have a local handyman go over to take anything. But we literally, when we renovated this thing, because it was somebody that lived there for 40 years. I mean, we redid everything. We redid the electrical in the place, all the appliances, everything. So even the heating system, and even though it was a condo, we still redid everything. So at least I don't even get a call that says, hey, the outlet's broken type thing.
Right. Yeah. Good.
So with, the expansion and the growth, during this time, what was for you you started, there was, I said, that first leap of just getting going and then making that jump, like you said, from 1 to 5 and having that comfortability of making that leap. Because once you do go to commercial, it is kind of different animal and how you look at everything. So what was some of the lessons learned that you had or mistakes that you made during that time?
So when we go, so we had 8 doors. So that would be 7 properties because one was a duplex, which was a little 2 houses on one lot. So we had 8 houses. So we go from 8 to 80. And really, first and foremost, a real estate meetup gets credit because I didn't know any better, right? So this is like 2006. We have 8 houses. We're filling big time because we never imagined we'd have 8, right? We would have been happy with 2. But we just kept reducing our expenses and buying the next property. And then we did cash out refis to buy more and all of that. And now we're looking for the next house, right? Because we want the next one. But you got to remember that first house was 107. Now they're going for like 250. And we're like, what the hell is going on? Because at 107, 1,100 rent cash flows. At 250, 1,100 rent doesn't cash flow. Like, what the hell is going on? So we go to a real estate meetup. An older guy is talking. He's probably my age now, or I'm his age when I heard him talk. But he's talking about small multifamilies. And my brain, as he's talking, thinks duplexes, triplexes, and quads. I'm like, okay, I get it. But no, he starts talking about commercial. And I'm like, what the hell is he talking about? And he's like, okay, well, anything 5 units and above, it's commercial financing. It's this whole other game. It doesn't have, Countrywide and IndyMac, they're not lending there. It's different standards, 60% or 65% LTV. I mean, all these new words he's throwing at me. I'm like, I thought only billionaires own multifamily and apartments, right? I didn't know any different. So I start looking. Again, I give him credit to this day. I wish I knew his name. I should know his name, but I don't remember. And I've never found him again. But I start looking him up. And again, that first 5-unit apartment deal, here are the numbers. So we sell a house that rents for $1,100 for $260, say. I think it was $264. The 5-unit building we bought was $223, and rent was $3,000.
There you go.
And oh, by the way, we get to take all that artificial equity and move it over to this other property, get a commercial loan. Commercial loan, the paperwork's this thick and residential's this thick. You have terms, right? Is it 5, 7, or 10? I mean, there's all kinds of differences, but for us, it was $1,000 rent at $250 or $3,000 at $220. And we're like, some is good, more is better. So we just did a bunch of 1031s over the course of 12 months, and we go from 8 to 80. No new equity, no new cash. We were probably at 50% LTV. And then the market crashes, right? Yeah, sure, our net worth goes down, but who cares? Our cash flow explodes because rentals were the thing to own back in 06, 07. So
yep. And also, if it's a 5 unit, you still got one roof like you have on the other one. It might be a little bigger, but your units are probably 1s and 2s.
They were all 1s, yeah.
All 1s, so really it's like a 5-bedroom house. Well, you got 5 kitchens and everything, but, you'll have some additional expenses. But, people, for me, I would much rather have 1 5 unit than 5 single families all day long.
All day long. I mean, especially at those price points, right? I mean, again, right? I mean, just 5 homes would have been $1 million, and I can go get 5 little ones. And now you do have higher turnover, because something I've learned since then is turnover is different, right? Yeah. Houses, they stay for about 8 years, a little bit over 8 years, and apartments are about 2.5 years. But you know what? If you're selective on your apartments, you can actually goose that higher. So what we look for, at least on this building, is we look for seniors. We try to make it a senior area, right? So again, you can be selective and you can kind of orient your tenants, but yeah, there's all kinds of stuff. So again, the 1031 exchange and going from 8 to 80, first off, never thought about it, never read about it, didn't know it was a thing. One conversation in a real estate meetup changed our life. And that's why you got to keep staying educated, because you just never know.
So, you got the 1031s and so forth. Do you also use any IRA or solo 401k funds to purchase any retirement funds to purchase anything?
Nope, never did that. I did borrow. So one thing I did do, again, because we did all of this on $40,000. That was all our capital that we had was 40 grand. We did borrow from our 401k. So we bought several houses. We bought a lot of houses in 2010 for my 401k. So check your 401k. Everybody's different. But what I could do is I could borrow up to 50 grand and then I could pay myself back every 12 months is what I chose to do. So every year I would pay that back, and I then would borrow it again. Pay it back, borrow it again, pay it again, borrow it again. So it was really cheap capital for me.
Yeah. And I mean, I just want to reiterate, if I heard you correctly. So you've gotten from, where you are today, starting out with $40,000.
Correct. Yep.
Yeah. So, it's money. And I know people say, you can't, you do need money in this business, but you don't need to have, $500,000. You just got to start somewhere. And, just like the book, it's one rental at a time, and just, get it, grow, build some equity, and then keep going from the next one to the next one.
Yeah. Let's just tie that out. I mean, again, we got to those 8 houses, which we would have been totally happy with the 40 grand bought us 3 houses.
Yeah.
And then the next 5 came from cash out refinances.
Yep. So, and we're at that point in time, were you doing everything in an LLC or your personal name, or how? We didn't
go to an LLC, which is now multiple LLCs, right until about that time. Once we went commercial, we went LLCs. Yep. We didn't know any different. We were borrowing in our name and all of that. No longer the case, but that's how it started.
Yep. And, there's a lot of benefits to borrowing in your name if you don't, and it really, I see people sometimes push everyone towards that LLC. It really depends on each individual person, because if somebody has basically, let's just say 40 grand to their name, and that's all they have, and you put that, why not use your name? Because what's there to sue? I mean, the money's already in the property. So, and with the LLC, a lot of times now you have the personal guarantees anyways, in the sense of from that perspective, get the insurance policy or the added umbrella policy on
no doubt. And personal umbrella.
Yep. And there you go. So I'm actually dealing with an issue right now of a property that we took back from the borrower, and a tree fell over onto somebody's shed. And, technically, based on what the law states, I'm not responsible, but they, want to, question it anyways. And I call my insurance company, and they're like, "Oh, yep, this covered under your umbrella." I'm like, "Okay, good."
Great. Take care of it.
Yep, exactly. So, Where do you mentioned that you want to shift gears a little bit to today, and where we're at
Sure.
today, and you, like I said, follow your market basically daily. Just
Certainly.
curious, what is going on in your markets based on kind of the world we're at today with so much unpredictability.
Yeah. So first and foremost, listings are down remarkably. So the market, again, I look every day.
Mm-hmm.
Historically speaking, I would probably have 40 to 50 listings across the Fresno metro at
Mm-hmm.
any one day that would meet my criteria, right?
Yeah.
So let's call it 50 so we have some easy math. In the environment of the last 10 weeks, that has gone down from 50 to 30 to 20 to 12. I think the last day I saw it was 12. So there's just no inventory.
Yeah.
At my market. So inventory is at record lows, and it started at record lows, and it's just it's gone further. So that's single family homes. Multifamily, value add, multifamily, commercial size, prices are falling. That transaction volume is not necessarily stopped, but it is actively being repriced. Fresno is a market where cap rates probably for quality products should be around a 7.5, maybe 7. For C properties, probably should be 10. And they were trading as low as 5.5 across the board. So, stuff is being adjusted as we speak. And we're going to have some commercial properties go back to the bank, I'm convinced. Because I've owned C properties in a recession, and it's freaking rough. So that's happening. But again, going back to single families, which again, I'm on record just in the last month saying I think single family homes are going to be the best investment for the next decade. I suspect that Friday, so we're recording this on June 8th. So Friday, June 5th, I believe is going to go down as the inflection point. That is the day that the job numbers came out, that people were wrong by 10 million, right? They expected 8 million negative. They got 2.5 positive. And I think we're going to see an inflection point. And what I hope happens, back to my earlier point, is listings come back. We are missing listings. I am telling every agent I know to get on the phone and call people. We need listings to come back. And if listings come back over the next 3 or 4 weeks, we're going to be off to the races. But if they stay artificially low, something else is going on. But I'm watching this actively right now.
Yeah, it's, in our market, it's very same thing. I mean, I look at, I live inside an area of a beltway, which is, basically has 3 major highways. I'm kind of in like a little triangle piece of that. And our listings in this area are down by about 50+% from where, where everything should be. And in the stuff that is being listed, it's flying off the shelves.
Just crazy.
Yeah. So I was curious because there's a lot of talk about, rent strikes and stuff like that. And I work for a commercial real estate company that, owns apartments and other things. And so I have some information regarding, kind of how they've been performing during this time. And it's not what you're hearing a lot on the news. And I'm just curious, like with your portfolio, have you seen any blips in regards to you're typically getting, 94% and you're maybe at 90, or, how for rent collections were?
So I was very nervous about this. Again, I called my brokerage on a Saturday, March 15th, I think it was. It might've been a Sunday. It was on a weekend. That's all I remember. And I said, okay, where are we at? What are we going to do? Who's at risk? And that was in March, right when California shut down. So because we were nervous, we didn't know what was happening, right? So we get through April. April collections, if memory serves, was at 97%. And then May was better. May was actually better than April. So we'll see. June so far, it's only the 8th is on track to be equal to May. But we'll see. Again, a lot of my stuff is Class C. So a lot of the benefit is from the unemployment. The stimulus unemployment kicker. So we'll see what happens in August. But as of now, knock on wood, it's okay. I think rent strikes certainly could happen. They'll likely happen in commercial spaces, probably in New York and San Francisco, where there's more just that feel and fervor. But I also believe most of that will be done against slumlords. Right. None of the stuff we have would be anything close to that. We overspend on investments, and because again, just like you talked about your condo, we fix everything. We spend it all up front, right? Bonus depreciation is a good thing. So we'll see. But as of right now, knock on wood, far exceeded my expectations.
Yep. So, and that's kind of, that's what I'm hearing from a lot of people out in the market is, so, commercial retail, that's a whole nother animal.
Mm-hmm.
The retail's, gotten hit pretty hard from different things. And, if you own retail, you've had to maybe do some workouts or, some types of adjustments there. But in the residential, from, like mine haven't missed a beat. And I only, I got a few, and people else I talk with, it's very similar. They haven't really, missed that beat.
Yeah. Again, if something you'll learn in this business is real estate's not about sticks and bricks. It's about people.
Yep.
And I firmly believe if you treat people the right way, they're, when times change and times get tough, they're going to treat you the right way. The other thing I want to say about tenants is 95+% of my tenants are awesome. They are hardworking people that just want a safe and secure place to live. 2 or 3% of them on occasion need to be reminded that rent is due. People forget. Yeah. And then there's 1 or 2% that are problems. And the good news is California and every state has rules to take care of problem tenants. Just follow the rules. But all this negative speak I hear about tenants is wrong. 95+% of my tenants are awesome individuals.
Yeah. And, from, the note investing space, I'd say it's probably similar to a lot of the investment deals that I have where, again, a lot of these people are distressed where they haven't been making payments, but a lot of them aren't bad people. They've just had occurrences happen, just like your first tenant, split up, get divorced or whatever,
Stuff happens.
And again, you've got certain ones that, that I have that know how to game the system or play the system and, haven't made payments in years. And, from that perspective, and like I said, there's rules that you got to follow to, deal with them. And, for me, I treat everyone pretty much the same. For me, I give people, that first conversation, I give everybody a chance. Everybody gets a chance. And if you're honest up front, tell me what's going on, you're going to get that chance. If you're basically, talking off, from one side of your mouth to the other and, it's not going to end well. And it's kind of, it's like any business in life. Unfortunately, not everybody is good people, but 95% of, typically people are. And, that's one of the things, like you mentioned with, finding good tenants. So I'm curious, do you have any secret sauce for, do you let your property managers, basically they do the screening, but do you also review, the tenants, or is there something that you look for?
Yeah. So something we've done very early on, this is going over a decade ago, is I was actively involved in defining what I call the box.
Okay.
Credit score, reference checks, debt, income to rent, all of those ratios. We sat down, we ironed it out. So if somebody comes in and they check all the boxes, it's a yes answer. Don't involve me. I don't care. Right. If they fit inside the box, automatic approved. If they miss one thing, they can reach out to me for an exception. If they miss 2, the answer is automatic no.
No. Okay.
Right. So I spend all the time creating the box, and that's been very helpful. We probably get 5 exception requests a year. So not very many, because again, rentals of the quality that we have get multiple applications. So it's very easy for them to say, oh, this one had 1 miss, but we're going to take this person because everything's a yes. So pretty good.
I found it interesting because I have a rental up just outside of Pittsburgh, and my property manager, when it was property that I had, and when we started to had to do some work on it, I kept telling him I want this done, and he goes, "Why are you making this so nice?" And I'm like, "Well, it's one of those things where I'll put a little money up, and again, you got to be careful in regards to." The rental, but this is an area that I'm getting $900 in rent, and I was in the property for like 30,000. So I could afford to put some money in it. And I looked at him, I said, well, granted it's a C area, but if I have the nicest house in a C area, I will get the best tenant for that property who, maybe can't afford the B area or works in the C area, but at least they still have the luxury of living in a very nice place and not have to live somewhere where they don't have heat or hot water or something along those lines.
Yeah.
So
yes, good deal.
And I find that goes a very long way. And way. And same thing, when you get applications, I mean, all my rentals are, I mean, I finish again, new kitchens, new baths, new flooring.
Mhm.
I never have issues renting any of my places. I get applications, same thing. It's for me, I get so many, it's filling in that box. But also if you get multiple, it's kind of like, which one is within that box
Mhm.
to fit as
Totally
well.
agree.
So I'm just curious, is it for you, is it your typical, kind of like 2.5 or 3 times income, credit score, a certain thing, job at a certain period of time? Is there any,
Yeah,
any,
3x
yep,
rent. So we like
mhm,
3, right? It gives
yep,
that health
mhm,
security. I think the credit score is 680 and
okay,
above. I
hmm,
think it might be 670
yep,
or 680.
hmm,
No evictions. No
hmm,
evictions is a big deal.
yeah,
They can have a judgment, but only for healthcare,
okay,
hospital or something, right? You can get explanations there.
hmm,
That's what I remember.
okay. So yeah, I mean, I'm curious. So even in the, the C areas, just the credit score, you still,
It can happen.
that's,
Yeah.
yeah,
Yeah.
that's a challenge that I've seen in kind of some of these other areas where people have the income, but and what it goes back to is kind of what you already touched upon. It's the judgments from the healthcare. They didn't have health insurance and they got a judgment. They had to go to ER and they got a $6,000 judgment against them. And it's that, and student loans is the other one that, you see a lot of
Yeah, I
people
haven't seen too
struggle
many
with.
student loans. We do see healthcare, and that's usually the exception.
Mm-hmm.
Because if they're current on
Mm-hmm.
everything else and they just have a
Mm-hmm.
$6,000 judgment because of this
Yeah.
or that,
Mm-hmm.
I get it,
Mm-hmm.
right?
Yeah.
Those are
So,
often
mhm.
an exception.
So one of the things I want to highlight that you mentioned several times in this is kind of, you watch your market every day, and I
Mhm.
can get the feeling from you. You're kind of, you follow a certain process and you stick with that process. And that's, I think, one of the hardest things in any type of business is consistency.
Mhm.
And I think
Mhm.
consistency can lead to a lot of success if you continue to be consistent in doing the same thing over and over and over again. And, is that
Mhm.
something that you would agree with as part of,
Yeah,
growing your business?
without question. Without question. I mean, when I go back
Mhm,
and think about my superpower, if I were to have
mhm,
one, it is that I can be laser focused and I'm okay
mhm,
doing the same thing for 20 years.
yeah.
I believe real estate investing is all about learning your market, because
Mhm,
any market, there's pick a number, thousands of listings.
mhm,
I firmly believe that 95% of them are bad or average deals as a
mhm,
cash flow rental, right?
yep.
I don't talk about owner occupant stuff. I'm like,
Mhm,
that doesn't make sense as a cash flow rental. So
mhm,
my job is to go find the 5%. Sometimes it's 2%, sometimes it's 1%.
mhm,
Uh, that makes sense. And oh, by the way, most of the time my offers are significantly less than asking. So I've
mhm,
got to go find the distressed situations or somebody where cash is more important or all of that. But I do the same thing over and over again. That's that's what I teach
mhm,
my students. It's go get focused on the market, go learn it. Because when you do it every day, the market talks to you. It
mhm,
just talks to you.
yeah,
What is selling? What isn't selling? What is dropping?
mhm,
It just talks to you. And what people don't get is, yes, I know it feels uncomfortable the first 2 weeks.
mhm,
It feels a little better at 30 days. But if
yeah,
you do it for
mhm,
60 days,
mhm,
you're going to be like, oh my God, I know what he's talking about now. Because people just want to do more, right? They start vibrating. They think real estate's easy. They get dollar signs in their eyes and they just start vibrating. Oh, I got to do something. I got to be busy.
mhm,
No. Spend 15 minutes a day looking at a set criteria
mhm.
and be done. Then look at it again tomorrow and then look at it again the day after and just go from there.
Yeah, I think I forget what they say is, but to develop a habit, you got to do something for like 30 or 45 consecutive days or something
Yeah.
along those lines. And, for people who, go to the gym or whatever it may be, but, it's not something that you can just do for a day or two or a week. But once you get into that habit, you
Mhm.
realize how smooth things and how much you can scale at that point in time. People again ask me, it's like, oh, you work full time and you have this portfolio. How do you do it? I said, because I'm consistent with my habits. Every morning I get up, basically I take, if there's 20 work days in the month, I actually break it down to 10 to 12 assets per day. First thing in the morning is I check on those 10 or 12, because again,
Yep.
it's like collecting rent. People, you're not chasing someone down every single day. Certain ones you have to follow up more, but it's like, okay, I go through those 10 or 12, that takes about 25 minutes, 30 minutes. I put
Yep.
put my notes in
Exactly.
the system. I check my emails. I always get to inbox zero. I'm a big inbox zero person. And then I tag my emails with, there's a thing called Yanado, I think it's pronounced. And basically I can tag things in different buckets for invoices or waiting for a reply, or this is in my court. And then there's probably 15 of those every day. And then
There you go.
that's in, hour in the morning, hour in the evening. And
Done.
that's it. Yeah. And then, I got, I want to record videos or podcasts, and people ask how you do it. It's because you just manage your time. It's my lunch break, so taking my lunch break.
There you go. I
But
like it.
so getting a wrap up here. Any final thoughts? What for your students and things? What are some of the biggest words of wisdom that you provide for people?
Yeah, the one rental at a time book, YouTube channel, all of that is really just about, I wanted to create belief, right? I wrote the book as a compliment to Rich Dad, Poor Dad. Rich Dad, Poor Dad, like as I said early on, changed my life, but it doesn't tell you how. It doesn't tell the journey, right? It talks about a condo in Portland and a condo in Honolulu, but that was it. So I wrote One Rental at a Time because Rich Dad, Poor Dad set me on a path, and I just document the history, the ups, the downs, the surprises, and the lessons learned. So I wrote that book on purpose because I wanted people to believe that it's possible. It's not a how-to book. It doesn't do how-to. This is somebody's story from a single house to financial freedom. So I want one rental at a time to be a belief or hope. And then, as we just talked about, the one rental at a time umbrella, student, whatever, is if you want to learn your market, it's focus and consistent execution. Don't follow the herd. Don't follow the lemmings. Because they'll get attracted to Burr, they'll get attracted to Airbnb, they'll do bigger is better, and then that will blow up. Just one rental at a time is totally okay.
I'm laughing when you mentioned the Burr and Airbnb because, there's a thing recently, probably like 4 months ago, about people bragging about arbitraging the Airbnb. They'll go get the rentals and this and that. And, some guys bragging about it. And there's another one who, basically someone was talking about the other one that I'm against this completely is people taking credit cards and racking up credit cards to buy houses and stuff. And this guy was talking about, and this was literally in like end of February. This guy was talking about how he took a $40,000 cash advance on a credit card to buy a house. And I made some comment. I'm like, this typically doesn't end well. And I had like 4 people on this post just completely just blast me and, so forth and tell me, I don't know what I'm doing. This is how we make money. We're going to be, millionaires. And I said, it's great, but you're borrowing money at such a high rate. And even though it might only have a low interest rate for a period of time, you've got zero leverage on that deal and zero tolerance for risk. Because the thing I always try and push on to people is it's great that numbers look good on paper, but what is the risk involved with those numbers? You have to measure risk. If you can't measure risk, you're not going to be successful in this business. So
perfect. Totally agree.
Well, if people want to reach out to you, hear your story, get more information, watch your YouTube channel, what's the best way for people to reach out to you?
Yeah. So the best way to follow me is I do daily original content on my YouTube channel called One Rental at a Time. So go check it out, hit subscribe. And if you want our story, it is now available in Amazon and on Audible. The book is called One Rental at a Time. So
yes, definitely recommend people go out, read it, listen to it. It's, like I said, it's the storytelling of, as you mentioned, it's giving hope. And, in today's world, I think a lot of us really look for hope with everything that's going on. So Michael, thanks for being on today, and look forward to talking with you in the future.
Thanks, Chris. Take care.
Thanks.